Another live trading session. We are broadcasting live from the Tier 1 London live trading room. We've got our Tier 1 traders here as well. And we're going to be going through the same pairs due to popular demand. Wasn't going to stream this week, but we had a lot of requests and a lot of people saying that they found it valuable. This isn't something I'm going to do all the time because it does, obviously, as I explained last week, it does detract some focus from the live trading session, but we're glad that we can reach a broader audience. And we can also, what we learned from last week was the fact that we were able to see the difference in approach from people outside of Tier 1 to the people inside Tier 1. And we were able to see the different mindset, the different kind of approach to their trading, and it also gave us the opportunity to share insights from inside Tier 1 to the broader trading community so that they could see how our traders approach the markets, which was really cool. So if you do, if you would like us to do more of these sessions and you are enjoying these live streams, I'm happy to do them every now and then, but make sure you let us know by hitting the like button and making sure that you subscribe to the channel so we can actually see the engagement, and also use the comments. If you saw the live and you was engaging in the chat, the actual comments that are coming up on the screen right here, that's great, but also leave comments inside the comment section below as well once the video, if you're watching the recording of this, because that will help boost the thing as well. Good morning, Julie. Good evening. The man of the hour. All right, so we're going to get stuck straight in. We're going to go through the same 8 pairs, okay? Before we do that, I've already been speaking and briefing my Tier 1 guys to see if they've got any setups. One of the things I'm thinking about doing in the future is bringing on the traders to share with us their best trade setup or what they're looking at. And then we bring them on the screen. They go through their analysis and explain to the team what they're looking at, how they're looking at getting involved, why it's a good opportunity, what they need in order to execute the trade, and how they're going to manage the trade, and basically just have that level of accountability of releasing, because not many traders verbally explain their ideas. And by doing that, it really does iron out any subjectivity, any gray areas. And also with the other traders' feedback, you can actually gain extra discretion. You can gain ideas that help you refine your edge. This is a exercise that's carried out by many prop firms. I know S&B Capital, once a day, they bring in their traders into the boardroom. They each go through their best trade idea for the day and in front of everyone. And it's a really powerful exercise. So we'll be doing some of that as well. Good morning, Jason and chat. Evening. The king is here. I wouldn't say I'm a king, but yeah. Thanks for tuning in. So for you guys that are wondering what's going on, we're going to be going through an 8-pair portfolio. I'm going to be using the TradingView platform just because it's easier to show you guys. I've also got my trading set up here. So this is my main trading station. I've got NinjaTrader set up on all of the trading PC windows there and the whole workspace there. And I've got my TradingView platform here ready to show you guys. So that's what we'll be going through. And it's going to be an 8-pair portfolio, this particular one. We're going to go through Aussie CAD, Aussie Dollar, Pound Dollar, Euro Dollar, Pound Aussie, Pound Yen, and Dollar Yen. We're going to go through them in that order, same order as the last 2 videos that we put out last week, which were very popular. I think we had about 2,000 people tune in a very short space of time, so that was pretty cool. And if you're here, make sure you let yourself known in the chat as well. All right. As I say, this isn't something I'll be doing all the time because it does detract focus, but I did enjoy doing it, and it provided a lot of value for you guys. So we will crack on. So any questions before we kick off? Has anyone got any setups on the radar that they want to share with us? Has anyone got anything that they want to ask? Any questions? If you've got any trades that you're in, please share with us. Remember those 4 rules, the 4 pieces of information for the rule. The market, if you're going to share an idea, share with us the market, the time frame, the strategy or the setup or the pattern, and the starting point, the price of the starting point or the impulse leg. Okay, so we can quickly go to that market, take a look at that that idea, and then we don't waste any time because we don't want to waste time. Sweet setup. Yep, it's actually having a little upgrade. Just had another little upgrade done because I was asked to feature on trader setups, which is kind of like an MTV Cribs style for professional traders, sharing with you the setups and everything. So watch out for that. Euro yen long, right? So that's a great example of not enough information. Tell us what the setup is, how you got involved, why you got involved, you know, where the starting point of the setup is, where you got in, where your stop loss is, where your target is. Share with us all that information, because Euro long isn't really going to help us. We need to know exactly what you're looking at. All right, let's go over to the chart then. Can everyone see the chart? Everyone should be able to see the chart. We've got a little short here on the dollar yen, but we're going to start on the Aussie CAD. We're going to go to the Aussie CAD. We're going to work our way through Aussie CAD, Aussie dollar, pound dollar, euro dollar, pound Aussie, pound yen, dollar yen, New Zealand dollar, in that order on the right hand side. Morning, Mike. Hope you're well. Tony's in the house, Caesar's in the house, Andrew's in the house. Mike says we're looking at daily chore on dollar yen, but was worried about the higher before I would get the 1-to-1 reward to risk, so I didn't get involved. Just pulling back. I'm still on a head and shoulders from yesterday, says Caesar. On what pair? There was a couple of head and shoulders that we were looking at yesterday. One was the pound dollar. One was the pound yen. Not the pound yen. Euro dollar and pound dollar we were looking at for head and shoulders, and there was many setups that were kind of forming. New Zealand dollar had bounced off that 69.27 level as well. So entry, okay, here we go. That's better. Dollar yen long, waiting for a pullback to 110.63, then buy target. Euro pound on close on overnight low, trade short for a 2 reward to risk. Entry 119.23, stop loss 19.15, take profit at 119.63, 15-minute time frame euro pair. Euro dollar 1 hour, says Caesar. What's the best indicator you used so far, sir? What an indicator isn't, the be all and end all. An indicator specifically, I don't put any of my trading success down to an indicator. Okay, the bulk of the trading success is down to being able to read price and build an edge based off of price action, knowing certain price levels, knowing how to read support and resistance, knowing the probabilities of how market moves at certain areas, some key levels, and then adding some filters and some indicators just for extra confirmation and kind of qualitative and quantitative edge refining. So I basically, apart from my swing trading where I use moving averages, exponential moving averages, my intraday stuff, really all I'm using is an ATR, okay, and I'm using RSI, and that is it. That in terms of indicators, RSI and the ATR is really all I'm using in terms of intraday filters. Thank you. Pound dollar buy, 13.90 pullback from 13.90.62. So is that a trend continuation trade that you're looking at there? All right, we're going to get stuck in. So our guys have already looked at this. We did this whole session yesterday, and what we're looking at is the Aussie CAD. All right, now, not much has changed on this from last week. If you go and watch last week's live streams, we had this equal measured move. We were looking for shorts all the way down until we retested that level at 92.50. I did a couple of videos on this. And when we tested that level, we hit it like a wall. We had this reversal here, okay? And once we bounced off of that, and we came off of that during... what was it, non-farm Friday, we just started moving sideways. Non-farm Friday rallied the price back into this consolidation zone. I don't want to short at that time because, you know, of where we're at in terms of major structure. So I'm not looking to jump on a trend or anything like that at this stage. Good morning, Julian. Hope you're doing well. And I don't necessarily want to buy because we haven't got a double bottom or anything. That move's been made. The non-farm Friday was when we saw that rally up. So I don't want to buy, I don't want to sell. We're in the middle of nowhere. You can draw on this channel. And remember, we're doing IPDE, so identify consolidation, predict further consolidation. That's all we can predict right now until price shows us otherwise, and then decide how we get involved. So unless you've got some kind of consolidation strategy in your toolbox that you can pull out and go, right, when the market's ranging like this, I can look at flags or some kind of structure-based short and long setup, or maybe I'd trade a bat pattern or a ratio pattern of some kind, or maybe you're looking at something else. Well, that's where you're going to be looking at these. You're not going to be looking at trend trades here. Aussie dollar flag at 1 hour, long target extension of pole, flag pole, and a 50% retracement of the pullback, says Belgin. Thanks for sharing. We'll take a look at that in just a moment. We'll go to the Aussie dollar next, Belgin, and we'll take a look at that. Keep these ideas coming in and we'll take a look as we go through. Thanks for sharing. And also, when we get to that pair, please reshare that so that we can, so it's fresh on the list. So, in terms of the Aussie CAD, the only thing that we potentially had on was one of our guys in the live trading session yesterday. If you guys are familiar with the cipher pattern was actually discovered by Darren Oglesby, who's one of my trading partners at Tier 1 Trading. This is a very profitable pattern. This one actually hasn't. This is not pain-free, but if you're still in this, you may have hit targets by adjusting your target position from C to D. If you had to adjust your targets, you would have adjusted down to 92.84 and you would have been taken out at around 93.13 for obviously not a lot of profit, but it's still a profit. But there's the setup there. But that's a great example of how you take a consolidation market and then you pick a strategy that suits consolidation. You execute that strategy, that order, and then you're in and then you know the probabilities of you've got your expectancy there. So other than that, there wasn't too much else on this. It's pretty much dying a death here, particularly on the hourly. The way that the market's moving here, just this little pattern here, is indicating that we might see a little rally out of this. So we'll keep an eye on it. It's nothing I can trade personally. If you do trade advanced patterns or ratio patterns, you could be looking at smaller patterns in here. The problem with smaller patterns on this right now, like this Gartley, is the ATR is so small because we're not really moving much. So the average true range is small, which means the profit, if you're trading a fixed position size, you know, you're not really going to be getting too much profit out of this. So then you've got to weigh up, is it worth your time? You know, is it worth your time managing that, or can you go and look at something else? So for me, anything under 10 pips isn't worth it, just because of the money management strategy that we're using on this portfolio. It's fixed position, it's not a percentage-based risk, and it doesn't make sense to keep having to check the charts all day for 10 pips because of the size of the account here. So not going to be looking at anything there. We'll come back to that at the end and kind of summarize that. Let's go to the Aussie dollar. So Aussie dollar flag 1 hour, says Belgin. He's long and the target is at the flagpole. So what Belgin has just typed in, and Belgin's one of our YouTube subscribers. very much valued YouTube subscriber. He is looking at the extension of the flagpole here for targets. Okay, and also a 50% retracement, I think he said, from the highs. So up here. So if we bring on the 50% retracement and go from to low, I guess this is what you're looking at, somewhere around this zone here for targets. But that's essentially what Belgin's looking at. Flag pattern. I think he said the 15-minute time frame. Oh no, 1 hour time frame. So he's looking at a flag pattern here. Breakout to the upside with a flagpole extension for targets. Does anyone else here trade flag patterns? Aussie says potential FTB on euro dollar, but doesn't meet my rules. Same. There is an FTB on the euro dollar that doesn't meet my rules as well. It's a nice looking setup. Not quite there for my rules. What would be nice is on the pound dollar if we got an FTB here in 1 minute, but I don't think that's going to happen somehow. I don't think that's going to happen somehow, so we'll come to that. What is your average yearly returns? I'm thinking of purchasing your course. First of all, my annual returns have nothing to do with a decision-making process on whether you purchase a program. That's not a correlated metric for a decision-making process into buying a program. Just to put that into some context, if you was to go to a car showroom and purchase a car, and before you purchased the car, you said to the guy, the salesman, look, I want you to guarantee me that this does a certain amount of miles to the gallon. What do you think they're going to say? Let me know. You guys let me know what they'll say. If you hold a gun to their head and say, you better promise me it's a certain amount of miles per gallon on this car, what are they going to say? No guarantee. Why is there no guarantee on that thing? And I know this is kind of common sense, but I get asked this a lot. What's the guarantee? And I'll share you my average returns. Your returns give credibility to your course. I know I won't get the same. Of course, yeah, I'm going to get to that, but I just want to kind of, for anyone else listening here, why this is important. Depends on how you drive it. Exactly. So you can't guarantee results for something when it depends solely on the person behind the wheel. And when you're out there learning to trade, the chances are you're not going to make it. You're not going to be able to do it. That's the truth. Chances are you won't do it. The probabilities are you won't do it. The statistics are you won't do it. Right? Now, all I can say is from my own personal experience and how I trade, I'm not the best trader in the world. I'm certainly not the worst trader in the world, but I'm not the best trader in the world. And I also don't trade at the moment in this time in my life. I'm not trading it to my full. I don't spend as much time as I could do trading because I do other things as well. So based on all of that, if you take out last year, because last year was my best year in trading to date, and that was skewed because of a couple of things. One was a crypto, and one was the 3rd of April where I did my largest return by about 5 times in 18 hours. So if you take out that year, I normally produce around 36 to 38% on my speculation. So per year on year. Okay, so that's my average returns, 36 to 38%. Up until 2020, I was at around 32 to 36. And then after last year, 36 to 38. Now, that breaks down to about a smaller amount per month on average than a lot of people like to think about, right? And they think, well, I could probably get 4%, 3%, you know, and they think, well, that doesn't really sound like a lot. But you have to understand that 4% per month average compounds out to about 61% per year. Now, people are trying to get 50%, 20% per month. That's where the problem comes. And they get frustrated and they get discouraged because they don't have an account size that matches up with a 4% return that will give them the income that they're after. So then they get a bit discouraged. But I promise you, if you can focus on making 2, 3, 4% per month, you're going to be in an unbelievable position to not only attract more capital, but have the confidence to throw as much into your trading account as possible if that's what you want to focus on more. All right. Now, the hardest bit is actually proving to yourself that you can do it, because it's only you. No one else cares. What's your standard deviation on annual returns? My maximum drawdown in my entire time trading in one go has been 7.2%. Okay, so I'm pretty, and that's one drawdown. My deviation, my lowest return over the last, let me just pull up my thing. Okay, so since 2014, my lowest return has been 22.8%. My lowest return on speculation. And that was 1 year. 20% of trades bring 80% returns. Trading is all on you. I guarantee you that if you don't start, it's not burning fuel. Yeah, exactly. Max drawdown of 7% was my maximum drawdown at any one given time. It was during the summer in 2016. Summer 2016, I hit a 7.3% drawdown. So what I can say about Tier 1, in fact, there's a lot of Tier 1 members here. Perhaps they should share their advice on Tier 1 instead of me, because that's a little bit biased. So if you're a Tier 1 member, please feel free in explaining what Tier 1 is, what the approach is, so that the outside community can get a bit more of an insight into why we create so many successful traders. Jason, you've always been a role model. Thank you for everything. Oh man, that's very kind. Thank you very much. A role model, eh? So my lowest annual return since 2014 is 22%, max drawdown of 7%. Correct. Thomas, good to have you here, mate. It's always good to see you. Thomas Latty, 11% won now since Feb. What I can say about drawdowns is when you're creating a system and you're creating a trading system and you're building a money management strategy around your trading system, bear in mind that humans can deal with a 10% fluctuation, positive gain or negative loss without emotions really kicking in. This is a evolutionary discovery that human beings can handle a 10% fluctuation in anything without becoming emotional. All right. So look, if you've got 10 friends and you lose one of your friends and they just, they're not your friend anymore, you'll be okay. But if you lose 2 friends, you'll be emotional. All right. Now, if you've got 3 friends and you lose 1 friend, you'll be emotional because it's 33%. Same with money. If you made, let's just say that you was on, let's just say that you earn £1,000 per week, okay? And then one week you earn £1,500, right? How would you feel? You'd feel quite uplifted, elated, right? You'd be a bit cocky. The old endorphins would be going, the serotonin would be going, and you'd be like, wow, this is great. If you made £1,100, it's not going to trigger you emotionally. Just the same way as if you normally earn £1,000 per week and then one week you earn £500, you're going to be distraught. You're going to be very, very distraught. But if you earn £1,000 and then one week you earn 900, you're not going to be as emotional. Does that make sense to everyone? The churches have figured this out. The religions have figured this out, right? This is why the churches ask for 10%, because they know tithing at 10% isn't going to affect you mentally. It's not going to affect you emotionally, and you're likely to not even think about it and even notice that it's gone. That's why they pick 10%. Okay? Now, when you're building a money management strategy around your trading system, it pays to never go below 10%. You know, make sure that you try and organize that your maximum allowable drawdown is never more than 10%. Okay? Never more than 10%. And ideally, you don't really want to hit that. So the way that you do that is all through risk management and money management, where you're reducing your position size as you're going through a drawdown, and you're increasing your position size when you get past a certain delta, when you get past a certain return. That means you accelerate. The difference between, look, the most of the money in trading is made through money management. I can tell you that. And you want to compare it to, like, if you're getting your body in performance, like in a peak performance. When you get in shape, what do you think 80% of it goes down to? %80 of it is mindset, right? 80% of losing is getting your body in peak performance is mindset. And that's because it means that you have to have certain habits, certain disciplines, and a value system that is strong enough to get you motivated intrinsically to do that each and every day, right? Then, out of that last remaining 20%, what percentage of that do you think makes up for getting your body in peak performance? What else is factored into get your body in peak performance? I can tell you about 90% of that remaining percent is diet and food. Okay? And then about 10% of that remaining is just exercise and actually working out and activity. The same goes for trading. Most of the results, take away the 80% mindset, because that is definitely necessary in trading. In fact, I'd probably say it's about 90% mindset in trading. But then the food and the diet analogy in trading is risk management and money management. The bulk of how you make your money is the risk management and the money management. And then the tiny little 5% is the execution of the trades. Does that make sense to everyone? Let me know if that makes sense. Hopefully, if there's any nutritionists here or fitness experts, you understand. Do you have a procedure for amending your plan, implement changes once a month or once a quarter if required? Yeah, I do mine I was doing mine every 6 months. I do it every year now. But we've built an entire tool that allows you to refine and optimize your own journaled trades. So it's a system that will help you build pivot tables and take out different days and months and different scenarios that will refine and optimize your trading strategy and how it performs going forward. So we do that. We don't want to do that too often. I recommend at least you do it is do a monthly review, but don't do a tweak. At least every 6 months you want to give it. I do mine every year now. I don't want to hear all this mindset BS. Trading should be a science, not some spiritual. Stay on topic. Well, then you're going to be on this channel and searching YouTube for a very long time, I'm afraid. Reading trading in the zone. Yeah, mindset is absolutely key. It's so ironic and tragic. The people that want to neglect the discipline that you need. I mean, yeah. But anyway, we're always here to help. Do you move your stop loss as you move profit, or leave alone, allow the trade to play out as back to proof? Yeah, I don't move my stop loss. The only time that I would move a stop loss is if first target has been hit. I'm asking a simple question. How much risk per trade? He keeps ignoring my question. It depends on every situation. I don't trade a certain percentage risk per trade. It's all calculated based on the money management strategy that we're using. It's far more advanced than just going £100 per trade or £200 per trade. Trading on average, there's no average. Literally, if you could see the way that we calculate our position size based on the smooth ratio money management strategy that we use, there is no fixed price per trade. It varies per pair, per strategy, and depending on where that stop loss is, it will depend on how much that equates to in monetary value. So it's not, we don't trade percentage risks, or I don't trade percentage risks on this. In my swing trading account, 1% on average is the risk per trade. Yeah, we don't, it's not correlated to percentage. It's a completely different money management strategy to probably whatever you've seen anywhere else. Here is a few bitter attitudes. Hello, can you explain a little bit about how short and stop loss works? What specifically are you looking for? A short means that you're shorting the market, means your order is placed betting that the market's going to go down, and a stop loss is a terminology for an order that will get you out of a trade if you're wrong. In other words, so you're admitting you're wrong, you're buying back or selling back to the market at a loss, and that stop loss order is the level at which you've decided that you're going to do that. Hit a 2 reward on a euro dollar risk 0.5. Nice, excellent. Okay, so around 1% roughly. How many trades? No, I don't trade 1% roughly. That's not it. How many trades per week or month on average? 3 trades a week. Can I get your WhatsApp number? No, I don't give out WhatsApp number. How long have you been consistently profitable for? 8 years? 9 years? Such weird questions. I know. I know. This is the tragic thing. The questions that are coming in from certain people are the very thing that is going to stop them getting to consistent profits. It's the wrong questions. Completely wrong questions. Completely wrong questions. And I don't know how you get someone around that. I really don't. I'm 18, want to learn to trade, need to wait until I can afford tier 1. Will you still be here in a few years? I'll be here. I'll be here. It's very eye-opening to see the difference between the approach of the tier 1 traders and certain other people. Okay, so 3 trades per week, 1 year of trading since 2014, so about 1,000 trades. The only 1%, 7% drawdown over 1,000 trades. I call BS. It's not 1% per trade. What does FTMO challenge have to do with anything? Yeah, FTMO, all of those trading competition style incentives, I'll say a few words about those. When you had a a world where the wall could be pulled over everyone's eyes, and there were a lot of big educators out there having it off for a lot of years, right? Not many people knew too much about it, and they could open a big education center, get people in the door, flog them a 2-day course, and away they go. They're now traders after 2 days, right? They were doing that for years and years and years, making a ton of money, right? No one can learn to trade in 2 days. No one can be consistently profitable in 2 days. And that's what they were doing, right? Then lockdown comes in. Okay, now bear in mind, when you used to go to these 2-day courses, what they'd do is have an incentive to get you to open a platform with a link broker to them that they're getting affiliate through, okay? And they would have a commission in the brokerage, or they would own the brokerage. So knowing that 90% of traders fail, as I said at the beginning of this live stream, it's a win-win for them. They're going to take the money, right? They're either going to take your money on the course, or they're going to take the other side of your trade and win. Make sense? So the agenda was, it doesn't matter if any traders fail, we're going to win-win, right? Now, as the dynamics of business have changed, and lockdown and coronavirus and COVID and all this thing, and everyone's been shifted out, and you can't no longer do these big seminar style things, right? You can't have people in a room. So what we've seen is a shift to a similar business model, but people being incentivized to get in and start trading as a competition. Now, I'll share you some thoughts on that. I'm sorry, but I'm not buying these claims. Worst ever year is 22% gain with a max drawdown of 7%. These results are insane. Too good to be true. The best in class have bigger drawdowns of 7%. No, you have a drawdown of what your money management system allows you to have. That's it. Once you set it on your money management system, you won't go below that, because it will literally tell you to stop trading. You control your risk. You control your money management. So you can't physically go below 7%, because I would stop trading at 10%. You control it. Your comment is something that's like, I'm not in control of my trading. That's not how it works. So the thing with challenges and things like that, let's just say that we have someone coming in, and we want to say, right, if you come into the competition, we're going to potentially fund your account, right? So I'm going to fund your account. First of all, that's the wrong approach to get people to learn to trade. So they've got no intention of you becoming a good trader, because everyone knows who's a professional trader, right? That you should be able to make a certain amount of money per time frame, per week, per day. If you think that, then you're delusional. So first of all, you're incentivizing the traders to go into it the wrong way. Does that make sense? So your interest isn't in, you haven't got the interest of the trader to become a good trader from day one. Your whole business model is trying to get people to rush through and get a result in a certain time, which is ridiculous in trading. It's not important. The second thing is, you have to pay to enter the competition. So if you're paying up to £1,000 to enter a competition, when 90% of the people fail, guess what? If they get 100 people sign up, that's 100 grand. And if you get a certain way down the line, they're going to fund you, start you off with 50 grand, knowing that 90% of people fail. So they've only had to pay out 10 grand, or they've only had to pay out like 10 people's account at 50 grand. It's all managed so that, you know, it's in their pocket. There's no incentive at all. I don't like Snakehouse, he's lying. Yeah. Look, if you don't like it, just don't do it. And here's the other thing. Right, I don't know your name, it's CTB, okay? CTB. So you first of all, I'm a bit funny about people that don't put their full names up, because I don't know what there is to hide. But look, If you don't like it, you can go and listen to someone else, or just take the trial at tier 1. It's $1 for 2 weeks. And you can have a look at all of the systems and the money management system and the tools and the strategies and the community. And if you can't risk $1 for 2 weeks, that's completely risk-free, you know, you don't get auto build or any contract or anything like that. If you can't risk that, then trading isn't for you anyway. You know, here's a question. Why wouldn't you do 2 weeks in tier 1 and see for yourself? And it might, I hope it opens your eyes. If you don't like, go to Daddy Pips. I'm a financial analyst at a big firm. I'm educated. So, oh, well, why are you here? Why are you here? We could learn something from you, maybe. All right, let's get on to the pairs. It's 20 past 8 now, and we're moving a little bit slow. So let's get stuck in. So the Aussie dollar, we broke through that head and shoulders neckline. This is where I started to become interested in shorting the market. I just wanted a bit more confirmation in movement to the downside. The moving averages hadn't quite fanned out how I like, and also we've only just broken closed above that that major support level. If we do push up to that, there'll be a decent level of resistance, which we'll be looking at. But we're not quite there yet. We're just about halfway between the most recent low and that level. So that's not something we can talk about right now. But if we do push up to that level, as I can't remember who it was, Bengill, was it? We do have an equal measured move. Okay, so if we bring on our horizontal line tool here, if we're starting to build out confluence and confirmation, you can see that this is the major structure support level, looking left. We've also got this support level here, okay, which should become resistance. And we've now got this equal measured move lining up with that zone as well. If you was to really drill down, you could start to bring on some other indicators, some other tools that will give you more confluence. Some of you guys like to use fibs. So if you go from low to high, you're going to see you've got a 1618 extension up at that level as well. So if you're identifying a prime area to short this market, then that would be the zone that I'd be inclined to look at. Let's just see if we've got any other questions. Been profitable since 18, signed up, learned strategies. It's the real deal. But do what you like, bro. No, I'm really... yeah. When you get a chance, can you explain higher high, higher close versus and vice versa? Are we looking at candle colors for confirmation and reliability? Does it not matter? Yeah, we can talk about higher high, higher close principles. Where did the other guy go? Is he gone? It's funny because he was on both live streams last week as well. I don't know why he's and I think at the beginning of this one he said he was interested in buying our course. So I'm not sure why he would need it. Renaissance Technology is the most successful hedge fund in the world. Don't get the returns Jason gets. Teams of PhDs, computer science, but Jason's better. The average passive returns from just my index funds alone is 12% per year. This year we did 24.5% passive index funds. My total investment portfolio, combined with all of my index funds, ETF, real estate investment trusts, my startups, my angel investing, my stocks that I buy, and my speculation portfolio, does around 76% on average per year. So I don't have to I don't have to prove anything. I'm just sharing with you guys step by step how to do each bit and build each piece of the puzzle. Those of you who are in my Tears of Freedom program, you know, right? There's a lot more depth to this than just pinging up some charts and trading. A lot more depth to that. Is anyone here a Tier 1, a Tears of Freedom member? Block him? No, I would never block anyone. We need people. We need people like this. So Aussie dollar we'll come back to. Not really looking at too much here at the moment. Let me just bring on a fib retracement. Not there. This is what we expect when we go out to a broader trading community. A lot of the guys are great. A lot of the guys are really, really great, and that's what we want to, provide value to. But unfortunately, there's always going to be people who spend years going around in circles, and they don't quite grasp that it's only them they've got to prove it to. You know, it's only you. No one else cares if you're profitable. So it's only you, and it's not about a strategy. It's not about a trading strategy. It's not about a system. It's about learning how to become a system developer for yourself and build your trading business. That's it. And 80% of trading returns, successful trading returns, comes down to mindset. And if you hear a comment like, I don't want to hear all this mindset BS, look, that it's so ironic. It's tragic. And here's the danger with having an attitude like that. When you have an attitude like that, you are making a judgment. And the thing with judgments is we all have every single trait, right? Which means that when you're saying something is ridiculous, you now can't do that very thing because you'll be judging it in yourself. So when you figure out, actually, there is a mindset element to this and I need to sort that out, you won't be able to do it because you've told everyone that that is a stupid thing to do. It's a bit like these kids that say they want to be YouTubers, right? And then every one of the friends, one tries it, and then all the friends try and make the other guy feel stupid for doing it. And now they all want to be YouTubers, but no one can do it because they've all said it's a stupid thing to do. So none of them take action, and no one ever gets anywhere. Seeing that a lot going on right now. I recommend checking out Confazilla channel. He exposes these scammers. Search Charlie Munger on course selling. Yep, check out Confazilla for sure. He sounds like a decent guy. Mate is getting... how often do you live stream? We've just done a couple of these. There's no plan to do it at a set frequency. But if you guys are enjoying it and we attract the right audience, then we'll continue to do it. I'm a member of Tier 1 Trading. Excellent. Thanks for tuning in. How often? Ex-member. Still learn a ton, especially on money management and other stuff from Always Free Podcast. Thanks, Jason. Thanks, Dom. All right, so we're going to look at the pound dollar. If you guys have got anything, I'm kind of just going through the pairs. There's a couple of advancements here. One's on this pair actually. So if you guys have got anything you want to let us know about, please do. If not, we'll just keep skimming through these pairs. I'm just taking a look through pound Aussie, pound. We've got some movement on pound yen at an interesting level. Pound dollar at an interesting level. Dollar yen already short here, and New Zealand dollar not so much. So pound dollar. In fact, what I think we'll do is we'll take a quick break. We'll take a quick 10-minute break. I'll take the time to get a coffee and answer some of your questions in the break. So if you guys want to shoot through some questions in the break, we'll answer those. and we'll come back at 08 30 40. Let's just say 43. 43 past the hour. If you guys have got any questions, let me know. If not, then forever hold your peace. We'll see you in 10 minutes. All right, guys. I know it's not quite 10 minutes past, but I'm going to just talk whilst we sip the coffee. CTB, I'm just looking through some of the comments here. I mean, I don't know how far to go into all of this because obviously you guys, especially you guys in the Tears of Freedom program, you know, you know the in-depth structure of my entire portfolio and the returns, the expectations, and all the rest of it. So we're not just talking about trading, we're talking about entire wealth management. And you guys who are in my Tears of Freedom program know how I do all that. You've got insights on that and you've got the tools on how to do that. Being compared to Charlie Munger, like if there's a video on Charlie Munger, Warren Buffett, those guys have got a strategy to approximate 10 to 14% per year. In fact, their goal is 4% per year. And that's their goal, 4% per year for years and years and years and years and years. They are not traders. They don't add speculation into their portfolio whatsoever. That's not how they run Berkshire Hathaway. So that's not the strategy there. Tier 1 has been the best money I've ever invested. Just good, honest platform. Excellent, Caesar. Appreciate that. Oh, the... Member of Tier 1? No, I don't think CTB is a member of Tier 1. He was asking, saying that is interested in joining, but I don't think you will. They are value investors, correct? Don't make this a bad thing. Jason being a great help. A lot of people is not for you, cool, but it's helping a ton of people. Pound New Zealand got long a month ago, around 1.9, and it reaches big number 2 soon. Looking for some movement down from there. So you're investing in currencies, much longer term. Awesome. I would just be mindful that, you know, what I find saving to the Tears of Freedom, Jason. Excellent. I can't wait to work with you on that. So look, what I find with currencies and people who take a longer term approach is they fall into the trap of letting their ego take hold, and they try and they kind of become a little bit arrogant as towards what price is going to do, and they hold and hold and hold, and eventually, you know, price retraces or price reverses, and they end up holding their tail. Unless you've got a very solid strategy for where you're getting in and where you're getting out, longer term Forex trading / investing can be very tricky. Not that you shouldn't have a plan for any type of investing, but particularly longer term Forex. I'm sorry for being a dick. I don't want to go too hard, but naturally I'm suspicious of the numbers. I mean, yeah. Look, listen, CTB. What's your name, first of all? Share your name. Charlie. Not Charlie Munger. I'm just kidding. Look, I just want to say this. It's really easy to build a fantasy on what the reality of anything looks like based on what perceptions you have of people's information. My approach and my motivation for even doing this live stream, let alone trading or educating or anything like that, didn't come from a place of needing to make money. It came from a place of, there is so much crap out there, I'm going to share my truth and my journey. And that's it, right? Behind the curtains of just speculation, if you go and listen to my podcast or you read my newsletter or you come into my Facebook group, you're going to see that there's a lot more to these returns that meets the eye. Okay, so I'm not just sharing with you a trading account. I'm sharing with you my entire wealth management portfolio and how I manage that, how I calculate the risk, how I calculate my money management strategy, how I allocate certain portions of my entire liquidity into different portions of my wealth liquidity system, and how the entire portfolio is then rebalanced, how we use capital partitioning to accelerate returns and reduce risk. All of this stuff is going on in the background. Okay, now if you're calling me one of the best traders in the world, that's one of the best traders in the world as far as you're aware. Okay, it doesn't mean I'm the best trader in the world, but it also doesn't mean I'm just getting all of those returns just from trading an 8-pair portfolio that you're seeing on the screen. If I went through and shared my entire investment portfolio with you guys each and every day, I'd be here all day. All right. Now, another thing is income and withdrawals and compounding. that changes. Depending on where I'm at in my life and what my motivation is and what my objective is at the time will mean I shift wealth from account to account or allocation to allocation. So I might stop taking withdrawals. So there's all of that to factor in, and I just want to, I hope that you just don't turn a blind eye. I'm not here to tell you to come and learn how to trade with tier one, because there's plenty of good educators out there. What I will say is I've sat on some of the best reputable prop firms, one of them being SMB Capital. I've spent a lot of time there. I've spent quite a few weeks on prop firms in London, and I've been in this industry long enough to have the confidence to say there's many traders that are good at trading but don't know how to handle their money. There's many people who know how to handle their money that don't make good traders. And I've seen it all. My job is to teach people, no matter what your income, how to put it into a system to accelerate returns so that you can replace your form of active income as efficiently as possible. And I'm sharing that based on step-by-step strategies that I used myself. So that by the age of 29 years old, I didn't have to physically go and work anywhere. I had enough to produce an income to cover a certain lifestyle forever, without, even when I die, without eating into liquidity. Okay, so there's a lot more to that. My trading returns are just the top portion of the pyramid. So if anything I just said has resonated and you want to learn a little bit more, by the way, guys, if you're a tier one, Tears of Freedom member, we've got our meeting tonight. We're going to be going over exactly this, asset allocations. Asset allocations in details. I'm going to be sharing with you another tool and a process on what to look for and how you can do it. But if anything has resonated with you here, just make sure that you go and listen to my podcast, at least episode 1. There's no risk there. Start at episode 1. Come back to me at episode 6, and if you're still interested and something's perked your ears, then great. If you've ditched it and you don't want to listen to anymore, great. You know, it's not for you. But there's not a lot of risk. My job is just to show up and provide realistic expectations, the truth, also expose scammers and things like that, because believe me, there's enough of them in my name. And we're working very hard to fight against that ourselves. I've just spent 20 grand on registered trademarks. 20 grand on registered trademarks to stop scammers. So there you have it. Take it how you want. How can I backtest it? Been in euro pound for almost 3 months. Almost hit targets. Aussie says going back in time by using historical data and logging every trade set up. Yeah, that's essentially it. Yeah. Yeah. All right. So yeah, in terms of returns and Charlie Munger and Warren Buffett, yes, my returns are better. Many traders are. My returns in business are better, but that's not their strategy. That's not their strategy. We did 1,200% in business last year. Berkshire Hathaway didn't do 1,200%. Please tell me what should the average stop loss in pips and what should be the average win in pips rate. That is a question that you just cannot answer. That is completely dynamic to your system. That's something you're going to have to build. And that's something we teach you how to build. Thanks for the passion. You have to provide value for others. Of course. Of course. I'm going to be here sharing it. In fact, I'm moving more towards just sharing as much value as I can now, because that's it. I've built my education programs. I've built my systems. I've built my wealth liquidity system. Now it's just a case of sharing it and getting it out to as many people as possible. How long are trades generally on for? More longer term? That depends how you trade. So my swing trading account, normally a week, anything from 2 days to a week, maximum really on the swing trading account. On my intraday trading account, within a day, within 24 hours. If you're trading a lower time frame, it's going to be less than that. It's going to be higher frequency, more opportunities, and less time in a trade. How can I be like you? You're my inspiration. I think when people say it's inspirational, what they see is they see something like, take Elon Musk, for example. People find Elon Musk inspirational, but the truth is, the only reason we find them inspirational is because we see in them something that reminds us of something in ourselves. Because we've all got the ability to choose how we spend our time and follow our dreams and do what we want to do. A lot of people get to a point in life where they think, right, that's inspirational, I want to do that. I always wanted to do this or that and the other. And then they spend years trying to get back to doing that when they had the choice to do it all along. Being inspired and living an inspired life is about choosing how you spend your time and covering the lifestyle costs that you need, that truly inspire you, not just because you want a Lambo because Dave's got one across the road, but things that you actually want to do and fulfilling that with income that you can generate from doing something that you love. That option is available to everyone. And you're going to get it a lot quicker if you don't go round and round and round in circles, because it's all on you. You talked about having a high EQ for trading. Could you elaborate on what emotional intelligence really is in the context of trading? Sure. Is everyone all right if we do this, by the way? I know we're not getting through much charts, but this is all very, very important topics. Great. So EQ. A lot of people say that you need... so this goes back to what I was saying about the 10% thing, right? Emotional intelligence. If you go outside of 10% fluctuations, that's when you start becoming emotional, unless you've got high EQ. And what EQ is emotional intelligence. So in order to become a good trader, generally, you need to have a higher IQ than most. All right? Because it means that you can deal with adversity, reason, logic, decision-making. And when you have a high IQ, above 110, 115, when you're in that top kind of 20% category, those traders do well quicker. All right? Makes sense? It's just kind of obvious, but they do well quicker. Now, when you factor in emotional intelligence, what emotional intelligence means is that you're able to disconnect from the monetary value of your account. And it's two separate things, because high IQ is your ability to make decisions quickly, deal with adaptation, see things logically, whereas EQ is more around the emotional intelligence around the fluctuation. So a lot of traders have similar personality profiles to serial killers, right? Now, you might laugh, but they have a disconnect where they don't see good and bad. They don't see good and bad, and they see it for what it is. So it's a decision process with zero emotional charge linked to that decision-making process. So if you was to, let's just say that, so surgeons have to have high emotional intelligence, okay? High EQ. Imagine if you rocked up to a hospital and you was carrying your family member who was just about to and they're coming in and they have to perform open heart surgery. And you get into the surgery and the surgeon's sweating, worrying, shaking, wiping his head with his shirt and all this kind of stuff. How are you going to feel? What's your confidence going to be like in the surgeon? And how's the surgeon going to perform? Whereas if you went in and they're very calm, they smell nice, they're very dry, hair swept nicely, pen in the pocket, really clean, calm, just saying you're in a great place. I've done it, I've performed this multiple times. You know, that is high EQ, and that's what's going to give you the confidence in that particular surgeon. Same with trading. If you don't have a high EQ, imagine trying to go and get investment or trying to, you know, fund your account from external investors or something like that. They're not gonna invest in you if you can't, if your emotions are on tilt. All right. Anyway, let's have a flick through some of these markets. I do love talking about this stuff, especially when we do these live streams. It makes a different. It breaks it up a little bit from the actual tier 1 live trading rooms, and you know, it's really important to get this information out there as well. I know we're going to have people out in the open who we attract that have different perceptions and different views, and that's great. But my job is to show up and give you guys the same message that I was giving you 6 years ago when I started this channel. If you go back to those videos, you'll see the same message. You'll see the same message. So consistency is what I'm here for, helping you guys turn a corner, helping you guys refine your strategies, and that's it. What's your thoughts on supply and demand trading? Well, that's essentially what trading is. Supply and demand. Thinking like the other trader and seeing where a high probability reaction point in the market is based off of supply and demand. I don't really have too many thoughts on more than that, unless you're talking about kind of structure swap zones, pivot zones. You talk about the speculation requires the highest level of psychology. Please explain in more detail. Sure. Buy or sell pound dollar? Wow, there's a question. Buy or sell pound dollar? Quick! I've got my wallet out. I've got my credit card out. Would you call your strategies mechanical rather than fundamental? Yes, they're strictly technical trading strategies with some qualitative analysis built in, but not, you know, I don't look at fundamentals too much. Fundamentals will be used to exaggerate positions for profits or extend profits, squeeze more money out of the move, but not for decision-making process into a trade. The only time I'd use fundamentals for a decision-making process is to stay out of a trade because of a certain fundamental release. So mindset, in terms of the higher speculation, the more psychology, the thing is, we have to, let's go back to a level of evolution, okay? We have to survive, all right? Now, if we have to survive, what do we need to survive? There's a part of your brain called the amygdala, and it's the oldest part of your brain from an evolutional standpoint, and it is there. It's very binary, okay? It doesn't make complex decisions. It just needs to survive, and it will trigger when there's a chance that you might not survive or you're in danger of some sort. Now, what do we need to survive? We need food, we need shelter, we need warmth, right? Clothing, water, cleaning products to make sure that we're free from germs and free from disease, right? All of those things cost money, right? All of those things cost money. Now, the whole time that you need to buy those things and you go to work and then you spend all your money and now you need to go to work again to get it all back, to buy it all again, and then go to work and then buy it all again and then it's gone. you are dipping in and out between being controlled by your amygdala, which is the part of your brain that is going, you need to survive, you need to survive, you need to survive. It creates desperation, scarcity, lack, right? And you end up being run by a survival instinct. Okay? So if we need to survive and we need those things to survive and we need money to buy those things, the biggest priority to move up to deal with a higher, more complex level and a greater demand of complexity in your risk management, right, and decision-making process is to cover some future costs of those things. Would you agree? So let's just say that you saved up enough money to live for 6 months, to buy food, shelter, water, and cleaning products for 6 months. If you had that cash sat in the bank, do you think that you would feel differently and think differently? Do you think that you would trigger that amygdala anymore? No. You then start to move up to a lower part of your brain, which can deal with more binaries, okay, more complexity. And it can start to manage decisions and deal with complexity and decisions in people below, right? Like the factory worker. The factory worker's making a decision this every minute, right? The factory floor manager is managing those factory workers. Make sense? The factory worker is paid less than the factory manager. Okay? So the more that you raise up, the more you can deal with those complexities. So the next thing you can do is then take some of you've got your cash savings, you're safe for 6 months. Next thing you don't want to do is put it straight into speculation. There's more layers you can build in order so that when you get to speculation, it's easy. You can easily handle those emotions. So what you want to do is consider then taking a portion of your cash and putting it into low risk, like the Charlie Mungers, like the Warren Buffetts, into index funds that allow you a lower return, better than inflation, lower return, 24% this year. But it's diversified across all the different companies, all the different sectors, okay? And you don't have to pick the bottom. And you automate it. You automate it so that you don't have to physically go through the act of doing something and parting with your money. They found that there was about a 76% uptake in people with a direct debit on insurance premiums than the people who had to write a check every year. And that's the reason, because as soon as emotions come into it and you have to make a decision around money, you deviate. You break the consistency. So you want to remove emotion. Once you've got some money stashed in the markets working for you, then you can go up a level and up a level and up a level. And you might look at real estate investment trusts. You might look at ETFs. You might look at large cap stocks, medium cap stocks, small cap stocks. Then you might look at some Forex and some crypto, until you've got such a small portion of your wealth liquidity system in speculation that you don't care. You've got broader time and space horizons. You can think clearly. You're not trying to feed your family and put food on your plate with a speculative return, which is very volatile. And we need to think in averages over a 12-month period for what we can take as income on average per month. Do you invest in farm or forestry land? I don't know. The latest development that I've done is a 50 million euro development in Portugal, which is just kicking off now. 22 luxury 3-bedroom villas 14 townhouses and 28 apartments, plus communal grounds, all in the area of Lewes. Okay, not on candle. All right. Let's flick through some of these pairs then. So what we're looking at is an FTB. If we can get an FTB here, this will be a nice entry because yes, we had this head and shoulders, inverse head and shoulders, and we've reversed off of that level we were looking at earlier at 37.90. We've now put in a higher high, higher close, which has broken the neckline. So for those of you who are head and shoulders traders, for starters, let's just bring this on the full screen here. For starters, you guys that are head and shoulders traders, you might already be looking, you might already be in because we already tested the neckline. We had a higher high, higher close here at 39.38. You might already be in. If you're not, the next opportunity on this conventionally for head and shoulders traders is then a pullback down to resistance becomes support, and then you trail this away. Some of you guys in the tier 1 community, I know that you trail stop, so you enter at the neckline. This is a strategy that I use on certain pairs. So aggressive entry at the neckline test, ATR stop below the lowest low of that test, and then straight in at market. And you're in, right? In which case you would be down here somewhere. You'd probably be down here at, unless you use this candle, you would be down between 92.28 and 94.62. That's where you'd be in. And what you do then is you trail. So you trail stops until you get stopped out. So if you're in that, good luck. I hope this rallies to the moon for you guys. If not, then there is a strong bullish signal here for you intraday traders. The only thing is, it's not right now because we're at the top. If you want to buy this right now, chances are the market's going to see a little rally, a little rollover. You're then going to get in at you've got in at a worse position, worse price point. You're taking a bigger risk than you need to. So this is where patience pays. Waiting for a little rollover until you get a reward to risk that suits your risk management rules. Get your stops below this most recent support level. And ideally, even if you're shooting for a retest of the highs, that you get more than a 1-to-1. And then you can consider either taking profits off there and splitting your position into 2 contracts or 3 contracts, and then trailing stops behind every outside return until you hit, or you get stopped out, or you hit your secondary targets, which you might have at structure. But that's how I'd handle that. There's no opportunity right now for my style anyway, or my approach. I'd need a little pullback and then confirmation of entry signal, and then get in. So that's what I would look at. Did Charlie go, or is he still here? Haven't seen him since. So euro dollar's pretty similar. Okay, we had the inverse head and shoulders. The only difference with the head and shoulders is we're at this resistance zone. So it's not as attractive. Not as attractive because we are in consolidation now, right? We've gone into a form of consolidation, which means we've had rejection candle to the upside with this high test candle wick. We've also had an interesting rejection to the downside right here with this low test candle wick. And now we're in limbo. We're in this little breakout channel. And again, as Ben Gill said earlier, this might be a great flag opportunity for some of you guys who trade flag patterns, where you're looking to trade an extension of the flagpole. Again, if you enter now, you're getting the worst entry because you're at the top of the flag. Ideally, you would have caught the bottom of the flag, or If you need 1, 2, 3 tests of the flag before you consider entering, then you're going to have to wait for the test of the low or a lower price point to get a better reward to risk profile, and then you can get in that way. So if you wait, if you're patient enough and you can get tight stops below the low of the flag and then take targets up at the flagpole extension, you're talking about a almost a 4-to-1 reward to risk on that. Okay, so again, patience pays. Don't just jump into trades for the sake of it. This is how you give back money to the market. This is what lowers your overall returns. And this is what a lot of traders struggle with. I'd rather take a lot less trades these days and be right a lot more. Have you heard of Astroforex? Yeah, I don't really have much to say about other educators, to be honest, guys. Just like, what do you think? Here's a question. Without me being biased, let's throw it out to the community and use this as an opportunity to think about what really is the quality and thoughts behind other people out there promoting Forex trading. Okay? So what are your thoughts on them? What are they selling? You know, what is their agenda? This is what I asked for all of them. You know, what's the messaging? Where's the interest? You guys let me know your thoughts on other educators. Let me know in the comments. Let's have it transparent, not coming from me. I don't want to say anything. I mean, it really is common sense. You can just search reviews, right? Search reviews. Type in so-and-so educator scam, or so-and-so educator reviews, so-and-so educator testimonials, and go and look. That includes with us, by the way. That includes us. Astro have a friend with car hiring company. I'm sure you know Alpesh Patel and Adam Harris. I spoke on stage with both of those guys at the London Investor Show. We did a big lunchtime discussion on the markets, and I was on the panel. I think it was 5 of us. Yep, I know Alpesh. In fact, Alpesh hosted the panel, and it was me, Adam Harris, Anthony Chung, Siam Kid, and that was at the big conference, the big investor show, London Investor Show, I think 2018. They hire Lambos. That guy Akil sus. I tell you what, Akil has no interest in showing off flashy things. He just wants to give you the real truth. My parents do pay me pocket money because they know I'm into trading. Well, your responsibility is to put that money to good use and not blow it, right? So build a system, build a strategy, build a risk management strategy, build a money management strategy, go and test it, make sure that it produces a positive expectancy, tweak it, optimize it as you need to, go and demo trade it for a few months just to make sure you iron out the actual the technicals of placing orders and ironing out any user errors, and then go and trade it live. Because guess what? You owe it to yourself to do that, and no one else cares if you make a profit or not. And if you do it the way I just said, you will be in a place where you do not risk a penny before you've got a profitable system. And that's it. This is why trading is one of the best businesses and wealth acceleration vehicles in the world, because it's actually not risky at all. It's actually not risky at all. You know the probabilities from day one. How are you getting on with schooling your kid? Both of my kids are at home now. So my eldest has left school. He's 16. He's going to do further education at a college, and my youngest son is being home taught as well. So he's left school as well, and it's good. School's pointless unless your ambition is to get desired grades to go to a desired route of law, veterinary, something where you need certain grades that someone's made up to get you to a certain position in a college or a university. So they've learnt the language, they've learnt social skills, they've learnt all the stuff that's important. Now there's nothing at school that's going to teach them that's something that's going to benefit them for their future. Once they get past 12, 13, if they don't wake up every day wanting to be a lawyer or a vet or an accountant, school isn't serving them in any way. How did he get into uni from homeschooling? Bridging course for his degree? No, college. He's not going to university. I laughed so hard when I heard your letter to the head teacher. Well, the second son, because they're both pulled out of school now, the second son, we wrote and said we'd like to pull the youngest boy out of school. First of all, they said, oh, we don't advise this. And then we said, okay, we'd like to anyway. And that was it. Okay. There was no resistance at all. Why are you ignoring my questions? Sorry, look, there's a lot of questions and I'm not seeing them all. So I'm not ignoring anything. Sorry, I haven't seen it. Are you a scalper or swing? Well, first of all, swing trading is a terminology that is reference to longer term moves, whether that's on the 5 minute, 1 minute, 15 minute, 4 hour daily time frame. You're going for a longer term move. Okay. Trend continuation trading, trend following trading, all that kind of stuff can be swing trading, or it can be more intraday where you're getting in and out within a few hours, a day. And swing trading's typically, it can still be in and out within a day or within an hour or whatever, but it's the style of approach that determines that. Scalping is more trying to get in and out very quickly, multiple times in a very short period of time to capture 2 pip, 3 pip moves. That's scalping. That's not something that I do at all. It's just not a good use of my time. I definitely wouldn't be able to do this kind of thing. It requires extreme focus. There's a lot of broker fees, right? So you have to have a big old account to make that worth your while. And for me, it's not a good use of my time. It's the same goes for range bar trading. Does anyone trade range bars here? Yep. So range bar trading is great because you can get some, especially if you're a structure-based trader or a trend continuation trader. There's some real nice, clean price movement on the range bars where you can get nice, clear entries, really nice to the eye to identify, and you can have a real nice trading career just trading range bars. There was a time in my life where I was really looking to implement range bar trading into my trading, but it requires such focus that you can't really keep talking to people, and you just don't have the time, because the range bar charts are, each candle is printed based on volume. It's not time. So you could have 10 candles in a minute, right? Or you could have 1 candle in a minute. So every time, if you go down to the 5 range or the 8 range bars, it means that every 8 pips a candle's printed. Make sense? So you're looking at volume rather than time. Have you made... Yeah, I started developing a strategy on range bars. I just couldn't implement it because I moved on to a different time in my wealth building where I didn't want to focus that much on the charts. Oh, have I made a video? I don't think so. I think Akil's made plenty of videos on range bar trading. 10 ticks or 20 tick chart. Use my 15 tick footprint chart. 95% are only there to sell courses of vague information that they can then pass off and say it's in your head. You must want to lose when things aren't working. No accountability. Absolutely, I agree. Which is why we built accountability into our platform. Every week we have accountability sessions with our traders, making sure that they're making progress. What are your thoughts on market makers? Cycle style of trade it. I'm not sure what your question is. Market makers are just views on gold, long-term based. Love Renko. Yep. Anthony Chung is a smart fella. He is. He's a good friend of mine. All right. So, pound Aussie. Remember we looked at this last week? Move had been made and I said, we've already had a short here. Very unlikely that we're going to get another short on a triple test. And what happened is we went above that. We've gone into this bigger zone, the high zone here. Yes, we may see a rollover, but for me, the high probability setup was at the initial test of that zone, not this. This is very similar to what happened with the pound dollar. Remember you guys when I said, when we initially tested this one right here, if you can see it right above my head in the camera, this is where we had the initial test. We had the double top, we had the ascending channel, we rolled over, caught the move, and then we pushed up into the higher zone and stayed there before rolling over for a long time. Very similar to what's going on with the pound Aussie right now. We tested the high zone, we rolled over, and now we're just hovering above, right up in that high zone. Not really a high probability short for me on that, so not interested at all, really. Anyone got anything on this? Are the moving averages you use the alligator by Bill Williams? I don't know who Bill Williams is. I don't know what alligator means, but these are exponential moving averages. This is the 8, this is the 20, and this is the 50. And I don't use it on this account anyway. They're just on there. I use it for my swing trading only. For my daily reversals, for my trend continuation, my daily chore setup. All right, look, we're getting on. So let's make a quick roundup of these pairs. I appreciate we haven't done too much like looking at setups and trading, but we've got wrapped up in conversations that are very, very important anyway. Hopefully we've shifted a few, we've kind of altered the perception in some way of some of you guys, hopefully, because I can promise you with trading, whatever it is you're trying to achieve, there's no magic bullet, all right? And successful trading is this. It's not about going around trying to find out who's got the best returns in their personal liquidity system or their personal wealth portfolio, okay? Consistent returns in trading comes from building pattern recognition to identify a pattern that happens frequently in the market, taking that pattern and going to test some rules of engagement into a series of orders that allow you to capitalize on that pattern over time, testing that through a historical sample size of data and finding the positive expectancy and making sure that's above, above 1, right? Then taking that system, refining it, adding any filters to it to make it higher quality or to suit your personality, meaning that the strike rate's in your favor or the reward to risk's in your favor, regardless of the strike rate, and you're getting as much opportunity as you feel you need. Then you go and add some capital, and then you manage your risk, manage your position size. If you do that so that it's skewed in your favor, so that you're right more, like your system produces a positive expectancy, and you've got a money management strategy that allows you to increase your returns when you're doing well and increase your position size when you're doing well and decrease your position size when you're losing or going for a drawdown, meaning you're protecting capital, you cannot lose over time. You know, that's the best position you're going to be in as a trader, and anyone can go and do that. The only reason that you won't be able to successfully trade it is due to mindset. Which is why, even though we got someone saying mindset's BS, you don't need mindset when it comes to trading, SMB Capital employ Dr. Brett Steenbarger 2 to 3 days a week. He charges $2,500 an hour, and they employ him as a psychologist to work with the traders on that trading floor. If it was BS, do you think they'd bother with that expense? Based on the fact that that company only earns money from its traders. The sole purpose of that company and how it generates revenue is through creating consistently profitable traders, and they spend thousands of dollars per week on a psychologist to help their traders. So if you're saying that mindset isn't important when it comes to trading, I'm telling you that's the only thing that's going to stop you trading. All right, let's take a look at the pound yen. So pound yen, similar situation with the kind of inverse head and shoulders setup. The only thing with this is we've pushed right up into this previous structure consolidation zone. Let's just bring on this rectangle here. Now, within this structure consolidation zone, and let's make this a little bit more opaque. Within this structure consolidation zone, there was 3 key levels of support and resistance. One was here, one was here, and one was here. So it's very choppy looking left. So if you was to short this, right, then where would you short it? Where would your stops go? You want to make sure that even target taking, where would your targets go? Because we've got all of this support looking left, right? So look, there's a strong level of support at 154.64. Even if you're to short here, you don't really want to be looking at targets below 154.64 or 66 if you want to get in and out without, that painful kind of sideways movement and being stuck in the trade for a long period of time and suffering rollover costs and all the rest of it. And plus your reward to risk profile isn't going to be great. Remember I said with the pound Aussie, pound yen, I look for the shallow window of entry because it's a huge ATR. So I want minimal risk, great reward to risk profiles. And there's just not that here for me. And I also don't want to look to get long because of where we're at. And we haven't put in a full reversal. Looking on the higher time frame, yes, we've violated this most recent outside return, but we haven't put in a reversal. So there's no, it's a consolidation move for me. So there's no high probability short, no high probability long. Certainly don't want to mess around with that pair. So on to the next. Do you think practicing Tai Chi energy, cultivation and meditation help with learning and practicing trading? Absolutely. Any kind of meditation or mastery of your emotions or emotional control is going to aid and complement your wealth building journey and just your life. Did you ever struggle with patience? I trade 4 hour, but feel like I need to be involved more. I'm filling my time with back testing, but made a couple of mistakes due to this. Yeah, it's a common thing. I personally didn't struggle with patience. That wasn't one of the things that I struggled with. But then again, I was getting a lot of opportunity when I started trading because I was trading lower time frames, 60-minute. And then I started day trading the New York session, and then I started day trading the London session. And patience wasn't something that I needed. I was getting quite a lot of opportunity. But this just reinforces that kind of triad of personality that I talk about getting enough opportunity that's right for you. The mistake a lot of traders make when they feel that is then they go down to a lower time frame. They try and do more, and then they find that they lose consistency because it interferes with their lifestyle. So they're on a call and they're meant to be in a trade now. You know, they're doing the school run and they're meant to be doing a trade now. Retail traders, that's reality for retail traders. So you need to find that sweet spot because you don't want to jeopardize consistency. That's the key ingredient to profitable results. Recently, I had a shift in psychology. Now been going forward, collecting the most simple strategies I can find based on daily charts. There you go. Doesn't have to be complex. You do have to have an edge. Okay, so to have an edge, just pure price action trading. Yes, there are traders that can do that. Chances are they've got another filter of some kind, another indicator, volume, looking at something else that they're adding on to kind of keep the edge there. Did you ever struggle with, read that one? Cool. Chat balloons covering the charts. It doesn't matter. We can see the charts on the right-hand side, this side. Really appreciate you and what you do for others to be financially free. I appreciate you for watching. Should I only look at a few pairs to trade rather than 20 plus pairs and picking the best? So here's the thing. It all depends on how many strategies you're looking to trade, what time frame you're looking to trade. I know traders that trade one strategy across 28 pairs. I know traders that trade 5 strategies on 1 pair, okay? But look at it like this. If you were starting any business, would you be able to manage 20 staff on day one? You know, you open the door, you start the business, got 20 staff. No. You would bring 1 member of staff in, maybe 2, make sure they know what they're doing, micromanage them, and then bring in another member of staff, teach them what to do, micromanage them, then bring in another member of staff. And the reason you do that is so you can control and you know where the strengths are, the weaknesses are, how they perform, what one's like the lions in the morning, what one's bus is always late, what one steals money from the till, what one likes to go on holiday. The markets are the same. You're going to have holidays where they go slow. You're going to have certain pairs that are good in consolidation and certain pairs that complement it in trend. You're going to have certain pairs that just don't perform on certain strategies. So you ditch them. And if you try and do too much at once, one, your pattern recognition is going to be affected because you won't be able to see the patterns because you're looking at too much for too long and you don't train your eye to see one or the other. So you're going to be sloppy. You're going to miss opportunities. Second of all, you're not going to have a handle on what's going on. You're not going to know where the death by 1,000 cuts is coming in, where you're losing tiny little bits of money on one strategy, on one pair. And that's going to eventually lead you to just break even or even losing profits at worst case. So just if you are thinking about trading multiple strategies, multiple pairs, one at a time. I trade 4 same pairs every day with 2 entry types. There you go. Excellent. I trade better because of you. Excellent. I appreciate the feedback. Demo trading on daily chore on 4 pairs. Specialized trading is the best. I prefer 1 strat per pair. Watch supercar and yacht videos every day. It's my form of daily meditation. As long as that's important to you and that is something you wake up truly inspired to achieve, and it's got a fulfilling meaning for you to achieve those things, then you will no doubt achieve it. If you're telling yourself you want something that isn't intrinsically valuable to you, you are chasing someone else's dream and therefore you're unlikely to achieve it. Simple as that. Hello. Jason Molina, how you doing? So this is a setup. Some of you guys took a pattern trade on this, familiar with a cipher. Some of you were looking at X, A, B, C, D for the cipher pattern. So you got short on a limit. Others, there's an ascending channel on the hourly chart, which is what this is. This is one of the few pairs that I can trade ascending channels on, one of 4 pairs that I can trade ascending channels on. And this is one of them. So ascending channel right at structure. Okay, right at structure in that major structure resistance zone. Ascending channel setting up on the hourly. We had 1, 2, 3, 4 tests of the channel. Entered on the 5th test at the high. Targets down here at structure 110.43. That's the setup. Stops tight above the highs. Good reward to risk profile, about a 2 to 1, just over, and that's it. Not a lot else to say about this. If we break and close above the high and I get stopped out, I'll be looking for buying opportunities on this. Could you please let us know the current best way to get involved with your team? Info for independent-ish level trader. Intermediate-ish level trader. What's your objective? What are you trying to... What's your agenda? When is your book out? That thing has been an absolute bane of my life with lockdown and everything and the publishers. We've changed publisher twice. Got a meeting with them Monday to hopefully sign it all off, and we're good to go. Unfortunately, it is such a drawn out process, and I don't know. It's going to be some point this summer. That's all I can say. I thought it was going to be Christmas last year, but that didn't happen. How many and also there's been a lot of trademark stuff going on in the background before the book gets published so that the R can go into the book. So that's obviously been a hold up as well. When do you suggest that a trader takes a break after winning or losing streak? I don't recommend that you take a break unless you're feeling emotionally triggered, and that's positive or negative. Okay, so if you're feeling emotional, whether that's elated and cocky or depressed, take a break. Because it means that you're not in a position to consistently trade your plan. You're being affected by it. And you don't know, you're not in tune with the expectations of the system that you've developed. Does that make sense? So if you're ever in that position, you need to reevaluate your next move. Something is affecting you that shouldn't, based on your historical developed platform. Financial freedom, build a personal fund enough to trade from, lower expenses and build leveraged income. There you go. That is the tiers of freedom. All right. Why don't you trade gold? I just don't. I haven't tested it. Sign up for the FB page, Tiers of Freedom. Yeah, if you want to get into my Facebook group, guys, it is tiersoffreedom.com/mastermind. Tiersoffreedom.com/mastermind. That will take you straight over to apply for the Facebook group. And if you're not on Facebook, I would recommend you just sign up for an account just for that group. This is, it's a completely different community in there. How did you learn day trading? Were you good from the beginning or you just lost money and learned about trades? An amalgamation of things. I lost about 38,000 pounds learning, throwing money into stuff that I didn't know about, courses that didn't work for me, 2-day courses, signal, like overlay systems. I lost about 38 grand. Through that process, I learned what didn't work and also became consistently profitable. I don't recommend anyone does that because you don't need to. All right. Anyone else got any questions? We're about to wrap up, guys. So we've kind of just flicked through these markets today. Again, there's a buying opportunity here on the New Zealand dollar, but we're just breaking and closing above this most recent high. So like the pound yen, like the euro dollar, like the pound dollar, there are opportunities here, but we need price to pull back so that we can get in. Or for me anyway, that's my approach. Other than that, Aussie CAD, here we go. We're seeing the breakout now by the looks of it. Potentially seeing a breakout of this here now. Aussie Dollar, there you go. Flag breakout towards your extension flagpole targets, which Ben Gill, hopefully you hit targets on that, mate. Pound dollar, waiting for a pullback to get long. Euro dollar, flag entry again, wait for a pullback to get long for the flag entry. Pound Aussie, we're seeing a rollover at the moment. Really not interested in this pair at all. Pound yen, again, very choppy market. I'd rather wait for something of a bit more substance to it. There's nothing here for me. Dollar yen, seeing an ascending channel, already in the trade. Hopefully we can see a rollover. New Zealand dollar, again, waiting for a pullback. We're only just pushing above the high. This is a decision point. We still haven't broken above the high. So, not going to want to buy, not going to want to sell on this. So that wraps up the 8-pair portfolio. A look at the markets. If you guys have got any questions or anything you want to look at, let me know. If not, then we'll be back again tomorrow. I won't be streaming tomorrow, but we'll be back in the live tier 1 live trading room tomorrow to go through some of these opportunities, hopefully get involved in more. Always good value, great session. It was a great session. It's always good to push out and reach a broader community so we can get, hopefully shift the mindset or the perceptions of other people who are maybe got a hurdle there or their own limiting belief there as to what contributes towards trading success. And if there's anything that I can say or do to help you turn that corner, then you guys know that I will. Lots of value as always. Thank you. Brilliant session. It was like the Lord of the Rings. Long but great value. Appreciate you, content producer. Great session. Morning all. Georgina, we're just wrapping up. Guys, if you enjoyed the session, let me know. Let me know in the comments what you thought about this. If you want me to do more of these as well. I think they're really valuable and really important discussions. Until then, take care. Tier 1, I'll see you tomorrow, and I'll see you then.